As I look back on my career, I'm reminded that the most important thing I've learned is that investing is not a get-rich quick scheme. It's a marathon, not a sprint. And if you're just starting out, there's one piece of advice that I wish someone had given me when I was your age of be patient. I remember when I first started my career in the investment business, I was driven by a desire to make money quickly. I was convinced that the next big thing would come along any day and I'd strike it rich. But the more I learned, the more I realized that this approach is doomed to fail. The stock market is not a place where you can try to time the economy or predict with certainty which stocks will go up. What I've found over the years is that success in investing comes from understanding what you don't know and being willing to learn. It's about cultivating a long-term perspective, even when the world around you seems to be changing at warp speed. And it's about having the discipline to stick with your investment plan, no matter how tempting it may be, to try to make quick profits. One of the most important things I've learned is that diversification is key. When you put all your eggs in one basket, you're risking a big loss if that basket happens to tip over. On the other hand, when you spread your investments out across different asset classes and industries, you can ride out market fluctuations with more ease. I also want to emphasize the importance of finding good quality companies to invest in. When I look at a company's financial statements, I'm looking for two things. First, a strong competitive position that will allow them to maintain their market share there over time. Second, a talented management team that can execute on that strategy. It's not about trying to find companies with high growth rates or high dividend yields. It's about finding companies with sustainable businesses that have the potential to deliver returns over the long haul. Another thing I've learned is that fees matter. When you're investing, you'll encounter all sorts of costs, from management fees to trading commissions. The key is to keep those costs as low as possible so that more of your money can be invested for returns. Finally, I want to stress the importance of avoiding get-rich quick schemes and any investment that seems too good to be true. If it's not backed by a solid business plan or a proven track record, it's probably not worth your time. In conclusion, investing is a journey, not a destination. It takes time, patience, discipline, and a willingness to learn. But if you stick with it, I promise you that the rewards will be well worth it. So don't get discouraged if you don't see immediate results. Just keep at it. And remember that every great investment takes time to pay off.